years ago, an independent professional investment organization was set up to invest the Canada Pension Plan on behalf of the millions of working and retired Canadians. It had a very clear goal, which is to earn the best possible investment returns. And today, CPP Investments invests across public equities, private equities, bonds, private debts, real estate, infrastructure, and many other areas, all in order to build a resilient, globally diversified portfolio and to grow the CPP Fund to help ensure the financial security of millions of Canadians now and for generations to come.
Hello. A warm welcome to everyone in British Columbia joining us today. Thank you for making the time to be with us at our public meeting. My name is Heather Monroe Bloom, and I have the pleasure of serving as chair of CPP Investments, the Canada Pension Plan Investment Board. Every 2 years, we hold public meetings with Canadians. It's our commitment to update you on how we are investing the CPP Fund to help ensure it will be there for many years to come, and to provide you with an opportunity to ask questions directly to our leadership. CPP is an important foundation for Canadians in retirement. Understanding the fund's performance and sustainability will provide information and reassurance regarding how it fits into planning for your future. This year, against the backdrop of the global pandemic, we're holding these meetings virtually. We believe this is the safest way to provide you with a full report on our work, while at the same time giving you an opportunity to ask questions. In developing today's program, we talked with numerous Canadians in advance. We wanted to determine what questions you might like us to address. Over the next 20 minutes, we will touch on many of these topics, including our approach to sustainable investing and how we design a resilient CPP fund for the long term. We will also share our most recent financial performance, and you will hear from our CEO, his perspective on the current global economic situation. Finally, we have 35 minutes set aside to answer your questions. You may submit your questions at any time during the presentation, and we will do our utmost to respond during the question period, and if not, we'll follow up with you after the broadcast. 10 years ago, I joined the board of CPP Investments, and I was honored to become chairperson in 2014. Over these years, our steadfast goal has been to provide the highest standard of governance and oversight at CPP Investments. Let me begin by saying a few words about how we do this on your behalf. In a challenging and rapidly changing environment, sound governance plays a critical role in ensuring that CPP Investments continues to meet its obligations to each of you, the 20 million Canadians who contribute to the CPP Fund, and those that rely on it as part of their financial security in retirement. CPP Investments operates at arm's length from federal and provincial governments and is guided by the independent, highly qualified professional board of directors, which I am privileged to chair. Our governance structure is designed to support a clear goal to invest the funds that come in from contributors, maximizing returns without incurring excessive risk. In addition, the assets in the CPP fund are strictly segregated from all government funds and are thus protected from any political interference. Our board is comprised of experienced individuals with the skill sets and expertise needed to provide effective oversight of this global investment organization. The board is also diverse, with a wide range of relevant professional backgrounds and global experience. We are each committed to serving the key public purpose of the fund. We are strong believers in the value of transparency and open dialogue, and mindful of the important role entrusted to us to help ensure the CPP remains sustainable for future generations. That's why each year we publish an annual report of our financial performance, and in it, other important information which you can find on our corporate website. And every 2 years we hold public meetings across Canada to answer questions from Canadians. Over the past 24 months, the board has continued its ongoing commitment to continually enhancing our governance. This has included approving the next phase of the organization's long-term strategic direction, a renewed focus on conduct and culture, and further strengthening of our risk management practices. Last year, the board approved a new integrated risk framework for the organization, and this year, the board created a standing risk committee that oversees this area. Our approach looks at all risks holistically, from those that stem from investment decisions to those posed by financial markets. We also keep an ongoing watch over emerging threats, such as climate change, cybersecurity, and geopolitical risks. Our ongoing crisis preparedness has positioned us to respond quickly to the COVID-19 pandemic. Through 2020, the board has worked closely with management to ensure the fund is well positioned to manage through the significant financial and operational impacts of the COVID-19 pandemic. Acknowledging these unprecedented circumstances, my fellow directors and I are confident that management is taking every appropriate step to weather these exceptional challenges to best of ability. We continue to have strong conviction in the organization's planning for the long term. Our highly constructive and collaborative relationship with management enables us to work together on the evolution of our strategy. Management understands their role in executing the strategy, and the board's role remains focused on oversight and guidance. Our 2025 business strategy, approved 2 years ago, is designed to keep us well positioned to mitigate future financial disruptions and to capitalize on new growth opportunities in the years ahead. We strive to remain a leader in realizing global governance best practices for our industry, and we actively promote strong governance practices not only in CPP Investments, but in all of the companies in which we invest. In doing so, we continue to represent the very best interests of you, our contributors and beneficiaries across Canada. On behalf of the Board of Directors and Management, we're united in our commitment to the highest standards of corporate governance, and we're proud to be recognized internationally as a leader in pension plan management. I'm very pleased to report that your CPP fund is in strong, capable hands under the leadership of our CEO, Mark Machin. I would now like to turn it over to Mark to share a few words with you.
Thank you, Heather. We're living in extraordinary times. The global pandemic continues to impact people, communities, and economies. It's altered our lives and how we live. And while this is not the first disease to spread around the world, this pandemic is casting a long shadow. Health officials and governments are learning many things about COVID-19, with better treatments, testing, and the global race to develop and produce a viable vaccine well underway. Yet, there's much more we need to know. It's this uncertainty and the start-stop of reopenings that's adversely impacting confidence in global economies. And Canada is not immune. Our economists at CPP Investments project the world economy will contract by 3.4% this year, a stark reversal from the 2.8% growth anticipated at the beginning of the year. Yet we're now starting to see improvements in many parts of the world where the economies are emerging from lockdowns and are now turning back to growth. In Canada, as businesses and retail have started to reopen, recovery has begun. However, it will likely be slow and extend well into 2021. All of you across Canada, from coast to coast to coast, have been deeply impacted. But there's one thing you don't need to worry about, and that's the financial security of the CPP fund. We invest the CPP fund to weather all types of storms. And while a global pandemic of this magnitude is rare, the likelihood of a big event affecting financial markets is more frequent. We not only anticipate, we prepare for moments like this. Over the past decade, we've enhanced our risk management practices and properly prepared a financial crisis plan, business continuity practices, and even a pandemic response plan. So when the pandemic hit, we quickly moved from 9 offices globally to more than 1,800 home offices, continuing to invest the CPP fund with the same skill, professionalism, and good judgment to help protect your retirement security. The strength of our long-term investing approach is a well-diversified portfolio that helps to ensure the fund is resilient. We invest across the globe in a wide range of industries and asset classes to ensure the investments are diversified and not dependent on just one area. And this minimizes the risk to the fund and helps us to earn the best possible returns over the long term. Right now, the global pandemic is actually accelerating growth in healthcare, technology, data infrastructure, and renewable energy, and that's where we're making investments, amongst many other diverse sectors. We're also looking closely at emerging opportunities created by the new habits likely to shape our post-COVID world. Opportunities such as the rise of e-commerce and online grocery, the adoption of telehealth, the increase in remote work, the creation of new complex supply chains, and the shift in population away from urban centers. We expect some of these to be long-lasting and will create significant investment opportunities for the future. Over the next 12 to 18 months, we expect the global economy will bounce back, albeit slowly. But whatever happens, you can continue to trust the CPP will be there for you for many years to come. Here's a short report on our performance.
At CPP Investments, we never lose sight of our long-term objectives in our daily work. Maximize investment returns for the CPP fund and minimize risk to help provide financial security for generations of Canadians. The fund grew to $434.4 billion as of June 30th, 2020, a $33.8 billion increase over the past 12 months. Our active management strategy and the strength of the diversified investment portfolio we've built over the years allowed us to weather the storm as the world faced extreme challenges this year. We can't always predict the future, yet we do plan for it. Our sophisticated investors take a disciplined long-term approach to diversify the fund across geographies and asset classes, maximizing our returns over a long horizon against a wide range of possible events. That's why the true test of our performance is our long-term results. In the last 10 years, we earned 10.7% net nominal return, or $259.8 billion in net income after all costs. Investing today with an eye to the future, we're building a portfolio designed to grow and generate returns over time. This year, we continue to make significant investments in innovative healthcare and advanced technologies, infrastructure, autonomous vehicles, and renewable energy, all critical in the years to come. Now, as we look ahead to a period of uncertainty, we will stay on course with our long-term investing strategy, prudently manage our capital, and closely manage our existing portfolio of investments. We'll continue to stress test our portfolio as we always do, looking at optimal diversification and strong investment returns under a variety of future scenarios. This way, we can be confident that the fund will continue to deliver decades of steady performance. It's why the latest report from the Chief Actuary of Canada confirmed that the fund remains sustainable for at least 75 years. While our daily lives may have changed, the sustainability of the CPP fund has not. Our sound long-term strategy is essential now more than ever. We'll continue to invest and grow the fund for millions and millions of Canadians as a critical part of their financial security today and for many years ahead. At CPP Investments, we believe sustainable investing is simply smart long-term investing. We have a clear goal to maximize return without undue risk of loss. Effectively managing environmental, social, and governance factors creates sustainable value over the long term.
10 years ago, we set up a group to look at environmental, social, and governance risks. And that group has grown from 2 people to 15 people today that look at investments across the organization to assess these risks.
We recently updated our policy on sustainable investments to more clearly articulate the business case for doing this and our expectations of corporates with respect to how they integrate ESG considerations into their strategy and operations.
When it comes to actively engaging with companies, we focus on 5 key areas. Water, one of the world's most critical resources. Human rights, because companies that don't respect human rights face potential operational turmoil, higher legal risks, lack of community support, and damage to their reputation. Executive compensation. We see clear evidence of long-term shareholder value when there is alignment between executive pay and company performance. Board effectiveness. Having a diverse board in place to guide strategy and oversee risks is critical to achieving superior financial performance. we have a global board gender voting practice to take a stand for increased representation of women on corporate boards around the world. In 2020, CPP Investments voted against the election of directors at 323 international companies for not having any women on their boards. And finally, climate change, one of the most significant global challenges of our time.
Climate change is one of the big issues of our generation. And as long-term investors, we need to think about both the risks and opportunities that climate change present. Climate change creates investment opportunities as well. For example, in renewable energy, where we've made investments in wind energy, in solar energy, and another one would be electric vehicle charging stations. We think that's going to be an important piece of infrastructure in the future where there are more and more electric vehicles on the road.
Over the last year, all major transactions have incorporated climate change due diligence. We've reviewed over 100 transactions worth more than $100 billion. We aim to deliver the investment teams and their investment committees clear line of sight of both the climate risks and opportunities associated with the investment, but also approaches to managing those risks or capturing those opportunities where we proceed with the investment.
One thing that we're really excited about is something that's happening here in Canada, which is an investment that we've made into carbon capture technology that we think could be really important in the future.
Meeting the needs of almost 8 billion people on the planet today is already creating tipping points with respect to water stress, pollution, income inequality, and many more factors. Consumers' expectations are quickly changing in response to this, and the number of companies that have failed to realize this and destroyed considerable shareholder value continues to grow. To be a successful investor in this new century, we have to be able to identify the companies proactively managing this reality, but also those failing to capture the risks and opportunities of this new century.
In some ways, the pandemic has pulled forward the future in terms of change. So now we have an opportunity to invest in things like climate change, where we can put our money to work in things that will help us have a more prosperous, sustainable, and healthy environment.
I don't think that many of us have really thought long-term about how we're going to save up for retirement. And when we do think about it, it's usually that retirement is a long way out.
Young people are concerned about buying their first home and settling into their careers. Retirement isn't on their radar. Many people don't have access to company pension plans that may have been available for previous generations. And on top of that, many people are struggling to save for retirement. Having the enhancements to the CPP is critically important to their financial security in retirement.
The increased benefits are really important for Canadians in the long term. It's going to provide a stronger and more stable income for today's generation and for future beneficiaries.
Young Canadians to know that the CPP will be there for them when they retire. It's a foundation for their retirement that they can count on.
A lot of our investments globally are very long-term. We really make the best investments through our intensive research deep dives into specific industries or sectors. I think it's great that we have a separate organization that actually manages the money on behalf of Canadians, that's sustainable for the long term, and it'll be there for people when they retire.
Whether you're starting in your career or you're nearing retirement, it's important to the social fabric of our country. I get to see firsthand the bright, talented minds that work at CPP Investments. It's inspiring to see how many people are dedicating their lives to growing the fund and working towards a very important public purpose.
At CPP Investments, we design a portfolio to help ensure the CPP is strong, resilient, and sustainable for the long term. Our team of professional investors invests around the world in public and private assets like stocks, bonds, real estate, and infrastructure. Together, this delivers a well-balanced, globally diversified portfolio that will help achieve higher returns over a very long horizon, and materially above what can be achieved through a low-cost passive investment strategy.
In designing a portfolio, the first step is looking at the risk. What is the appropriate risk target? Because we have to take some amount of risk in order to earn returns. We consider market losses or short-term volatility, reputational risk, and the ability to sustain a long-term strategy.
We have to balance short-term risk with longer-term returns. If we took an insufficient amount of risk, we would not be able to sustain the plan in the longer term. But on the other hand, if we took too much risk, there'd be more volatility in the near term and downside risk for beneficiaries and recipients. So we try to balance those two things together to get the best outcomes for contributors and beneficiaries in the near term and in the long term.
The total portfolio approach means that we look beyond the asset class labels and try to identify what are the risk-return factors that drive returns for different investments.
Principally, these are economic drivers, things like GDP growth, the business cycle, interest rates, inflation, the way in which those broad economic factors affect asset returns. And we try to design a portfolio that's quite balanced across all those various economic factors. The reason for that is that they often behave in quite different ways. So by having a balanced set of exposures, we get a more resilient portfolio that's better diversified and more able to deliver on our mandate.
Diversification is the most powerful way to mitigate market downturns and enhance investment returns. It helps to build a resilient portfolio.
And the way diversification works is effectively it means that you are investing in assets, in sectors, in companies that don't move together all at the same time. One asset may be doing well and another asset is not doing so well, and there's kind of a natural offset or a bit of insurance or hedge that comes from diversification. You could think of it as essentially meaning that we're not putting all our eggs in one basket. We're putting our eggs in a lot of different baskets. If a given country is doing poorly and you can't be sure in advance whether that will happen, you've also invested in another country that's doing well. The same thing would be true with particular companies. And this enables us to have a more resilient portfolio.
To determine how resilient our portfolio is, we perform stress tests to see how it will react under various scenarios. And then, COVID hit.
Market crisis due to COVID-19 in March was unprecedented. However, in a crisis like that, you just really discover whether the diversification is working, and the diversification in our portfolio worked as intended. So our losses in the portfolio were limited because they're offset by the outperformance or the gains from government bonds and the depreciation of the Canadian dollar. And it worked exactly as we expected.
We manage the fund in a way that's responsible, disciplined, and consistent with our mandate so that there's sustained value added over the long term. CPP Investments also has in place robust valuation processes to measure the fair values of our investments on an ongoing basis. With a well-balanced and globally diversified portfolio, Canadians can trust that the CPP will be there for you today and for generations to come.
On behalf of the more than 1,800 CPP investment professionals around the world and our board of directors, thank you for taking the time to be with us today. We hope we've given you a better understanding of what we do and of our commitment to you, the more than 20 million CPP contributors and beneficiaries. We would now like to move to the question and answer session of our meeting.
Hello, and welcome to all CPP contributors and beneficiaries in British Columbia. As Heather just mentioned, we're now moving to this final segment of the public meeting, the question and answer period. Before kicking it off, I would like to note that we are currently meeting virtually throughout all of British Columbia and would therefore like to acknowledge the lands and traditional territories of the Indigenous peoples of British Columbia. My name is Tara Perkins. I'm CPPIB's Managing Director of External Affairs, and we're happy to host these meetings to provide you, the CPP contributors and beneficiaries, with the opportunity to ask questions about our organization and the role that it plays in helping ensure the fund's sustainability. I'll be moderating this session today, and I'm here with John Graham. He's our Senior Managing Director and Global Head of Credit Investments, and he'll be answering your questions.
Great. Thanks, Tara. And before we begin, on behalf of the entire organization, let me extend our appreciation to everyone who's joined us here today. As Tara mentioned, my name is John Graham. I'm Senior Managing Director and Global Head of Credit Investments at CPP Investments. Credit Investments is one of 6 investment groups we have, and we're responsible for investing in credit, which is basically bonds and loans around the globe. I'm also a member of the senior management team, the team that's responsible for fund strategy and operations. So I'm very excited to be here today to answer your questions and hopefully provide some key insights into CPP Investments.
And we very much do encourage those questions today, so if you have one, please submit it by clicking on the blue question tab at the bottom left-hand side of your screen. Thank you to all of you who submitted questions in advance. We've received quite a few of those. We want to ensure we have time for live questions as well. So if there are any questions we don't get to today, we will keep them and review them, and in keeping with our protocols, we'll endeavor to get back to you by email in a timely manner. So John, should we get started? Our first question, I've read that CPPIB donated $600,000 through Crestone Peak Resources, which is owned and controlled by CPPIB, to partisan Republican political action committees in 2018. These donations were part of a wider fossil fuel industry campaign to prevent stronger regulations on fracking in Colorado. I'm opposed to these donations, and when Canada claims to be a signatory to COP21, I am completely opposed to supporting the fossil fuel industry. Will CPPIB request a return of the $600 that I donated?
Great, thank you. And thank you very much for the question and the opportunity to address it. It is one that we have received several times through these provincial meetings. And just to be very clear, no CPP investments, no Canadian funds were used for political donations, nor will they ever be used for political donations. And it really gets down to the role of the investor versus the role of the operator. CPP Investments is the investor, invested in Crestone. Crestone is operated by a professional management team. And like many other companies across the U.S., it is engaged in the policy-making process for its industry. We do not, as an investor, preclude companies that we invest in from engaging in policy debates. Very similar to what's going on in the tech space right now, where companies such as Facebook and Google are very actively engaged in policy debates and discussions. So just to reiterate, no CPP investment funds were used or will ever be used for political donations.
Our second question, why does the CPP Investment Board hold more than 10 million shares in Maui, formerly called Marine Harvest, the world's largest open net cage salmon feedlot company, when decades of science have confirmed that the industry is extremely detrimental to wild salmon and is in fact killing British Columbia's wild salmon as young smolts pass dozens of feedlots on their annual migration to the Pacific Ocean?
Great. Thank you for the question. And maybe before answering it, I would encourage people to visit our corporate website. In addition to our annual report, our quarterly report, and other material disclosures, we do disclose all of our holdings. So if people are interested in what we invest in, please visit our corporate website. And we do invest in agriculture. The investment thesis here is that the global demand for protein is rising. And aquaculture does provide an alternative to traditionally harvested fish and seafood. Now, as an investor, we fully expect that any company we invest in is compliant with environmental laws and regulations, as well as industry best practices. Stewardship of the CPP fund goes beyond simply buying and selling assets. We have a responsibility to conduct ourselves as principled and thoughtful owners with a view to the best interest of our contributors and beneficiaries. And as such, we work proactively to enhance long-term performance by engaging with the companies we invest in.
Okay. So we received some video questions in advance of this meeting. This first one was addressed to our CEO, Mark Machin. Why don't we take a look at that now?
Hello, my name is Dr. Paul Kershaw. I'm a policy professor at the University of BC and founder of Generation Squeeze. Gen Squeeze is a voice for younger Canadians in politics and the market, backed by cutting-edge research. And all of us at Gen Squeeze very much appreciate the important work that the CPPIB does to promote the financial security of today's retirees and to protect that financial security for those of us who plan to retire decades from now. My question is about residential real estate, which we know is an important part of your investment strategy. I ask it because housing affordability is very important to younger generations. So, how can the CPPIB reduce the risk that its investments in residential real estate actually contribute to inflating the prices of homes here in Canada and around the globe, thereby exacerbating unaffordability challenges? And as a follow-up, how can CPPIB investments reduce the risk that you actually replace existing affordable rental supply with new stock? Because such new stock often displaces current residents who then have fewer affordable options. Thanks very much for taking this question.
I know that's one that's of interest to a lot of people. We were able to put that to our CEO, Mark, and let's look at that now.
Thank you for the question. We recognize this is a major issue, particularly for younger people. And we know it's particularly pronounced in Vancouver. In fact, the only major residential real estate project that we have invested in is here in Toronto, and it's a complex of older buildings that are actually subject to rent control regulation. We do invest in small amounts of residential real estate in other parts of the world, but it's generally involved new construction of rental housing, and that typically adds to the local housing stock and helps address supply constraints in those markets. In the few situations where it's involved the replacement of existing housing, then we've worked closely with local authorities and communities, and we're really mindful of the needs of all the stakeholders in those communities.
Okay. So our next question, how will the current pandemic affect both the levels of contributions and benefits for the present and future?
Great, and great question, and appreciate the opportunity to address also the impact of COVID-19 on the fund. And the short answer is the fund is sound. But I think it's fair to say that as an organization, we didn't predict COVID-19. I think back to January, I was actually in Asia on a business trip when the first cases and the first deaths were being reported in Wuhan, and trying to internalize what this would mean and what this would mean for the globe and what it would mean for the global financial markets. Through my working career, worked through the dot-com meltdown, the financial aftermath of 9/11, the global financial crisis, and now COVID-19. And it's the expression that history doesn't always repeat itself, but it does rhyme. So we didn't predict exactly COVID-19, but as Mark talked about in the introductory videos, we were prepared. We spent quite a bit of time over the past few years putting in place an integrated risk framework, a financial crisis plan, business continuity plan, and even a pandemic response plan. And we would do these simulations and understanding all these desktop simulations on different scenarios and how we would react to them, which really helped us prepare for the pandemic. And our long-term strategy, how we've built the organization, how we've built the portfolio, has prepared us for short-term volatility while continuing to focus on long-term returns. And on June 30th, we reported our most recent returns, and focusing on the long term, our 10-year return was 10.7%. So that's a compounded 10-year return. That's an excellent return over 10 years. In every 3 years, just back to the soundness of the fund, every 3 years, the chief actuary will evaluate the sustainability of the fund. The last test was done in 2018 and published in December of 2019, and the fund is sustainable for 75 more years. Now, we appreciate that this was done pre-COVID-19, but it is done taking into consideration lots of variables around demographics, around unemployment, around birth rates, mortality rates, and again, the fund is sound, and the independent assessment done, published in December of 2019, again confirmed for 75 more years.
Great. So we received a video question in advance. This one is for you, John, so why don't we look at that one now?
The CEO of the Asia Pacific Foundation of Canada. One of the issues that the foundation is following quite closely is the need for Canada to diversify into other countries in Asia. China obviously is an important market, and CPPIB has done quite a bit of work in that market. What are the opportunities do you see for CPPIB in ASEAN and perhaps in India?
Great, and thank you very much for the question. Short answer, we do see lots of opportunities in China and India across lots of different asset classes. But maybe taking a step back, share a little bit of why we invest in emerging markets. And as was in our annual report for the year ending in March, as part of our 2025 strategy, we have an aspiration to invest up to a third of the fund in emerging markets. And part of the reason for that is, as we look here today, China, it's the second biggest economy in the world, and it's growing at a rate that it may very well become the biggest economy in the world. India, another very large market. And we need to take the time to understand these markets. We need to take the time to develop a competency in these markets. There's a growth potential in these markets that we don't see in many other economies around the world. You have trends in increasing consumerism, trends in increasing urban development that offer investment opportunities. We think of ourselves as a generational investor. We really are trying to invest the funds for generations of Canadians. It's not about the next quarter, it's not about the next year, it's really thinking in the term of, in decades. And we need to understand these markets. We need to build that competency, or we would be doing future generations a disservice by not having those relationships and those competencies. Emerging markets also provides diversification for the fund. And we really experienced that this year with the COVID-19 crisis. We're diversified by industry, we're diversified by sector, we're diversified by geography. And when some economies are going right, other economies are going left. And we saw that through the COVID-19 crisis. And in particular, China and India providing diversification benefit throughout this calendar year. If we think about how we invest in emerging markets and focusing in on the Asia region, we do have 3 offices there. We have an office in Mumbai, we have an office in Hong Kong, and we do have an office in Sydney. Now, recognizing Sydney's not an emerging market, but we do have an office there. And having an office in these areas allows us to staff that office with local experts, with people who really understand the local market and have years of investing experience and relationships in those markets. So in China and India, we see opportunities in credit, we see opportunities in infrastructure, in real estate, lots of different asset classes. And for reference, as of June 30th, we had $127 billion in the entire Asia Pacific region. But as I mentioned, where we do have offices, you can think that's where we're really focusing some of our private investment activities, where we do try to be surgical in looking at opportunities in those areas.
So our next question, I was sent an article on how CPPIB has invested in coal, in Chinese coal. As people are aware of climate change and the enormous part that fossil fuel plays in creating greenhouse gases, and are therefore divesting from fossil fuels, particularly coal, I am disturbed that CPP is invested in coal at any amount. As I write this, our air on southern Vancouver Island is so smoky from U.S. wildfires that many people are not going outside, and even while inside are having trouble breathing. What would it take for CPPIB to invest in green energy and technology to have an Earth that is livable for mammals and other species? Do you consider your investments, although apparently profitable, to be ethical or wise in the face of climate change?
Great. Well, thank you for the question. And I'll address the Chinese coal investments. And again, pointing to our website and encourage people to visit our corporate website where we do disclose our holdings. And, on a periodic basis, people can go and visit and see our updated holdings. Now, our exposure to Chinese coal companies largely comes through our Chinese public equities. And CPP Investment invests in thousands of companies around the world. And many of these are small holdings and they're constantly changing. They're in our quantitative portfolio or our passive portfolio, and there really are thousands of securities in there. I would share that we continue to evolve and enhance our asset management and portfolio management capabilities. And we are in the process of implementing a procedure for looking at all of these small holdings in the quantitative book and our passive book through an environmental, social, and governance filter. This is going on right now as we speak. So I would encourage people in the future to visit our website and look for the updated holdings at that time. Now, with respect to the energy transition, and we do invest across the entire energy transition, and we really do take an approach of engagement in companies across the energy transition. And we recognize in our investment activities that some forms of energy are on the decline, like coal, and others are really increasing. A couple years ago, we made a decision as a management team to build out a dedicated renewables energy team. We call it Power and Renewables. And this was with the view this was an exciting area with lots of opportunity and where we would see lots of interesting investment opportunities. So we built out a team of experts around the globe. And while renewable energy has always been on strategy for us, 2-3 years ago our holdings were less than 100 million in renewable energy. And today within this group alone, we have 6.6 billion invested in renewable energy.
So our next question, given the massive government deficit, what guarantee or laws do we have to ensure that the government in power does not encroach on the CPP fund to pay down the deficits or use it for other purposes? And I know, John, we've received a couple of questions along this theme.
Okay, great. Ian, great question, and certainly one that we have received quite a bit through these provincial meetings. And our mandate is set out in the CPP-IB Act. And we have a single fiduciary mandate, and that is to maximize return without undue risk of loss. We operate at arm's length from government, and we have no political interference in our investment activities. The funds are segregated from government funds, and again, we operate at arm's length. Our board of directors that governs the institution is comprised of highly qualified professionals from across Canada who are appointed by the federal and provincial finance ministers, but they operate as a professional board of directors. So once again, just to reiterate, we do have no political interference in our investment activities.
Great. So this woman has a question. You touched on part of the answer maybe when you were speaking about emerging markets, but she says, why do we need to spend money on 9 global offices when computers and phone technology offer instant contact globally with any and all companies and corporations? Why are you spending my money on these high expenses when it is not necessary? The amount of annual administration fees, why can't we keep costs down and make the payments to CPP recipients higher? There are always workforce contributions coming in.
Yeah, great question. And certainly we take the process of opening an office very seriously and really take the cost benefit of opening an office very seriously. And maybe just talk a little bit about our global footprint and our investment strategy. As an organization, we pursue active management, and we invest in asset classes, both public and private, around the globe. We invest in private equity, infrastructure, real estate, credit, and many of these in a private manner. And it's important for us to be a global investor, and it's important for us to have the capabilities to invest really around the globe. We've made a decision the best way to do this is to create that local understanding and that local presence. So we have 9 offices: San Francisco, New York, Sao Paulo, Toronto, London, Luxembourg, Mumbai, Hong Kong, and Sydney. Each one of those is staffed with local experts, local professionals, local investors who have a deep knowledge of their local markets and deep relationships. And right now, this has been very valuable, also helping us navigate some of the geopolitical risks that we're experiencing throughout this year.
Great. And I would encourage the viewers, if you go to the Resources tab down the left-hand side of your screen, you'll find a link there to our annual report, and it's on page 60, the start of our cost section, where you can read in depth about our costs. So the next question. In the last federal election campaign, one of the election promises was an increase to the CPP survivors benefit, that it would be indexed and done in July. At this time, the increase has not happened. What, if any, information can you provide on this issue, and what effect would any increase in the survivors benefit have as a financial impact on the fund?
Well, thank you for the question. I'm probably not the best person to answer it, in that CPP Investment is the asset manager for the surplus funds of the Canada Pension Plan, and the Canada Pension Plan is administered by Service Canada and by Employment and Social Development Canada. So I'd encourage people to visit their websites to get more information. would say that, CPP, it is a pension plan. It is a benefit, and any increase in benefits has some implication on the cost. Exactly what that is, I don't know. It'll be debated by federal and provincial finance ministers and validated by the Office of the Chief Actuary.
Okay. So our next question comes from a woman who's saying, has CPPIB considered the issue of diversity and not just gender equality? If so, what are they?
Yeah, great question. And I think inclusion and diversity is very important to us as an organization, and maybe I'll spend a little bit of time talking about our approach to diversity and inclusion. And we're a talent-based organization. What we do as an organization is make investment decisions. And it's really important for us as we recruit talent to recruit from as diverse a population as we can. Gender, race, religion, sexual orientation. So ensure that we really are casting the net as wide as we can during our recruitment. And within CPP Investments, ensuring we have an inclusive environment and ensuring that we have an environment where people can come to work and be themselves, where people can express themselves, people can express a dissenting view. We actually have quite a few grassroots movements within CPPIB, Mosaic to represent underrepresented groups. We have an LGBT out at CPPIB to represent the LGBTQ community. And we recently signed into the Black North Pledge. And this is to help fight anti-Black systemic racism, something that I'm personally involved in, where as part of this pledge, we're looking to hire 5% of our student population from the Black community, and encouraging across Canada 3.5% of Blacks on boards and in senior management teams across the country. We also are engaged in Indigenous and ensuring that from a recruiting perspective that we are engaging recruiters that are specifically engaged with the Indigenous community.
So this next gentleman's question is actually kind of related to something you and I were discussing prior to the meeting. He says, why aren't we doing more to tell the public about ourselves? I often read posts on social media indicating that the Canadian government has access to our money. It is an insurance plan for all workers who contributed while working. Why does the CPP not sell themselves?
Yeah, that's a good question, and it's a balance, obviously. It's a balance. First and foremost, we are here investing on the behalf of all Canadians to ensure their financial security in retirement, and that is job one. And I think we've done a very good job. As of June 30th, our 10-year returns were 10.7%. But we have been more engaged, and our public affairs and communication team has been more engaged in getting our story out. That CPP is sustainable for 75 more years, that we operate at arm's length from government. And we really do have a governance structure that is the envy of the world. It is one of the great Canadian success stories, and as part of these provincial meetings is an opportunity to share that.
Okay. So this woman says, in deciding how to invest my own money, I take two things into consideration. One, the viability of the investment in terms of both security and return on investment. Two, the impact my investment might have on society and the world in which I live. Thus, I avoid investing in businesses that involve arms, tobacco, slavery, child labor, etc. In today's world, being threatened by a climate catastrophe due to carbon emissions, I no longer invest in fossil fuels of any kind. I want my money to be working to grow sustainable energy sources like wind, solar, and geothermal. Why isn't our CPP money being invested in alignment with these same principles?
Great. Again, thank you for the question, and very important question. And I would share that environmental, social, and governance considerations are really fundamentally embedded in how we invest and how we manage the portfolio. In the opening video, we talked about the ESG framework. And again, I'd encourage people to go to our corporate website. We recently published our 2020 report on sustainable investing. That can provide a lot more information than I can in the next few minutes on our approach to embedding these issues into our investment decisions. But as was also mentioned, every new material investment we make, we embed ESG considerations. It's some of the key considerations that as an organization, we debate, we discuss, and we ensure that we properly quantify when we make investment decisions. We also embed environmental, social, and governance in how we manage the portfolio. We periodically look at all the assets we have and ensure that based on new data coming in, new insights coming in, that we are incorporating best-in-class learnings into our investments and also encouraging, as an investor, the companies to embed ESG into how they operate.
Yeah. And that sustainable investing report, in addition to being on our website, is available in that resources tab to the left of your screen. And I know we're starting to run low on time. John, maybe we just go a little bit long and do a couple more questions. So one is, what pension amount can a person expect gross payment per month or per year if they've contributed at the maximum amount for 40 years? I find that too many people expect to retire and live on their CPP. That's scary.
Okay, the exact numbers I don't have at my fingertips. So I'd encourage people to visit the Service Canada website, and there's lots of resources there. The CPP is designed to be one of the 3 pillars for retirement for Canadians. And the 3 pillars are personal savings, any type of corporate plan that people may have, and CPP. As people may be aware, there was recently some enhancements to CPP, and for people who are starting to pay in now and looking out into the future, the plan is for the CPP to replace up to 1/3 of their working income, up to kind of an average industrial wage.
Yeah, and there's additional resources. Again, I'll point to that resources tab as well for the Service Canada site that you mentioned, and a few others that people can go to. So this might be our last question. We'll see. Will CPP explain how it is or is preparing to address the recommendations of the Task Force on Climate-Related Financial Disclosures?
Great. So thank you for the question, and as you may know, we were actually only one of 2 asset managers that participated in this process, just to highlights our engagement in the process. We are a big advocate of disclosure, a big advocate of transparency, and around our carbon footprint. Within, again, the report that we've referenced on our 2020 report on sustainable investing, we will provide our progress in that report, and we fully anticipate to be compliant with all of the recommendations by March of next year.
Okay. Maybe one final question, John. This woman is saying, given all of the information that has arisen out of the pandemic about the appalling conditions in long-term care, is the fund invested in long-term care investments? And if we are, how are we ensuring that the places we invest are keeping seniors in long-term care safe?
Great. Thank you for the question. Obviously, it's been a tragic situation with COVID-19 and the impact in long-term care. As I mentioned earlier, we do have thousands of investments around the world, and within our passive holdings, we may have some exposure to care facilities in Canada. We do have one position in our active book in France. It's a company called Orpea. They are a European-based long-term care facility, and one that has had to manage its way through the COVID-19 crisis, and one that, as an investor, we've been engaged with to ensuring that they are doing everything they can and really ensuring that they are best in class.
Great. I think that's all our time for questions today. We're coming to a close. Thank you so much for doing this, John.
Great. Well, thank you very much to everyone for your questions. So we certainly appreciate your participation and engagement today, and we hope that it helped. We hope that you are more familiar with CPP Investments, and more importantly, we hope you appreciate the sustainability of the fund over the long term. We also invite you to complete a short survey. It'll be appearing maybe on your screen now or at the end of the broadcast. And on behalf of our board, on behalf of management, and all of the CPP investment employees, thanks again for your participation, and please be safe.